Hello, hello, hello. Mic test, mic test, mic test. Hello, hello, hello. Mic test, mic test, mic test. So, hello, guys, and welcome to our weekly webinar series. Before I get started, I'm just checking the microphone and everything. If you guys are able to hear me and watch the stream live, just let me know in the live chat. Right, thank you, Atibat and Mohammed. So, in that case, let's just get started very quickly with the introduction first. So guys, as you know, my name is Neerav. I'm the admin and owner of 50eyes.com website as well as 50 Eyes Market Analysis YouTube channel. And currently we are going live with our 154th edition of the Trading Opportunities webinar. In these webinar series, which we conduct weekly, obviously, we discuss various different markets, including Euro, USD, Crude Oil, Gold, S&P, and Bitcoin. In the webinars conducted so far, that is the 152 webinars, we have captured a total of 384 trades. And we'll check what happened with our discussion from the last one. That is the 153rd webinar, as we do our discussion of each chart. Right. Few more things about my work before we proceed with the webinars. I'm the author of the book Think with the Markets. It's available on Amazon Kindle, basically electronic delivery platform with the single click. Those of you who are new here can also go ahead and check my past record of all the videos and webinars which we have published so far since 2016. As you can see, we have compiled a very detailed documentation of work till 2021, and after that, the weekly series can be checked here in the Trading Opportunities playlist using this link. So far, we have had accuracy of 80% plus, all documented, obviously, and you can check it for yourselves by visiting this link. Lastly, the way we'll proceed with the webinar is we'll discuss the chart of Euro, followed by Crude Oil, Gold, S&P, and in the end, we'll discuss the chart of BTC. Every time I discuss the chart, I'll also ask at the end of the discussion if you have any doubts or questions related to our discussion, of course. And if you have, you can just type them in the live chat. Just to note that questions are only taken from the live chat. And yes, lastly, this is the final webinar for this month. That is the final public webinar. The next webinar that we will have will be members exclusive. So basically, we will be conducting webinar, but it will be only accessible to the members of our Slack private group. In case you are interested in continuous coverage and joining our webinars regularly, you can just request details for how to become a member and all that. The links are flashing now or scrolling right at the bottom of the screen, or are also available in the YouTube description or LinkedIn description if you are watching this stream on LinkedIn. So with that being said, we are kind of done with our boring and monotonous introduction, and my final test for audio is also working. So in that case, let's now proceed with our actual discussions. So first of all, I'll load the chart of Euro USD on screen. And in case you are watching this later on as a recording, do note that all this content is only best viewed in 1080p. So just turn the video quality to 1080 or force the video quality to 1080p. Right. With that being said, let's now get started with our discussions. First of all, the chart of Euro USD from our last discussion. We are just checking what was being said. And Let's just play the video here. So what we were expecting in the last discussion was possible diagonal, and keep in mind this discussion was done on 14th of this month, right? So let's play the video now. So that was the basic setup. We were waiting for the break of the trend line and then possible continuation of down move. That was the main setup or main theme on this chart in our last discussion. And at that time, the price was trading around 1.04978. Let's now head over to our actual chart and see how things have progressed since then. Where is the chart of euro over here? So our last discussion was, as I mentioned, was on 14th February. So the price was somewhere over here when we discussed last, and the setup was this diagonal, I believe we were discussing. And as I said, the setup was that we were waiting for the market to break below this trend line, and possibly if we could get a retest, then we would have looked for short entries. So we did get a retest. The market did go below the trend line, retest, and then continued lower. So it more or less covered the picture perfectly. This gives us a +1 for our analysis, making our tally come to 385 from our last webinars, and we'll see other charts as we go along. Yes. So as I was saying, the market had moved as we discussed in the last webinar, more or less, actually not more or less, precisely the way we discussed in the last webinar. So if you were in the discussion and I mean, if you were in the discussion, you should have been able to spot it in live market, more or less. 1 second. Yes. Yes. So as I was saying, this did work out. Let's now see what else is happening here. So at this point in time, there are two things that are possible here. Let me just discuss them one by one. First thing that is possible is that this market is. 1 second. Let me just check one more thing here before we proceed. Yes. So I have to take it from this point of reference. Price level around 1.02091. So from this point of reference, we are counting the structure as a possible ABC up, like a zigzag, or a possible impulse up that is in 5 waves. Actually, no, basically we are taking the main count as A, B, and C up. So here we can take this as our wave A, and we can take this as our wave B, and we can then just consider that the wave C is continuing, with this being the 1 of the C, 2 of the C, and 3 of the C, and so on and so forth. That will be one way of looking at this. Another way would be that we will assume that B has continued as a more what do you call, flat kind of a structure, and that would give us again the similar kind of pattern, which will suggest that the market will take off from here. So both counts are suggesting to more or less the same thing, but let's just take one thing at a time. So in this first view, let's just call this H1. In the H1 view, what we are expecting is that this market is heading in an impulse and possibly will form an up leg after the wave 2 is complete. So we are waiting for the market to break above the last known high of 1.05133. So basically, long above this level will be the setup in our hypothesis one. Wait for longs, breakout longs, right? Second hypothesis is, let's call this H2, and let's remove things a little bit from here. Second hypothesis basically suggests that A is complete there, B is complete here, and then this is 1 up, 2 down, and there will be a 3 up, 4 down, and 5 up. Basically, the analysis is still suggesting upside movement. It's just that the strength of it is more because of the nature of the or the placement of the wave B. So more or less, both analyses are suggesting longs, but only if we see a break above 1.05133. Even second analysis, it is the same level. The price level for breakout long is the same level, right? Only time we are concerned is if the market goes and trades below 1.04054, this low basically, right? At that point in time, we will have to consider possibilities like the ABC correction is complete and this is now heading up only for two. So 1, 2, and heading down. That is possible. We don't have any confirmation for it yet, and as such, we don't really care either because it's a breakout long, very simple setup. So definitely a market to watch out for. Very strong setup on the upside if it works. If it doesn't work, we will look for new count or basically the alternate bearish view below 1.040, whatever this level is at your chart. Keep in mind we are using this data feed. If you're using a different data feed, then prices will vary a little bit. Let me just check the comments. In the meantime, if you have any doubts or questions, you can just post them in the live chat. One of our private Slack group members, Etivet, thank you for the confirmation. And same here, one of our regular viewers, Mohammed, thank you for the confirmation. And Dawood, hello, Joe. And good morning to you, Luis. Well, I don't see any doubts or questions here. In case my pace is a little bit high, then just let me know. If it's low, too low, then also let me know. Right. We'll just continue over with our next chart. So next chart is the chart of crude oil. Let's just check what was being discussed on the chart of crude oil in our last webinar, which was conducted on the 14th of this month. Let me just push it a little bit ahead. We were looking for downward movement here. One second. Yes, as I was saying, we were looking for bearish movement on this counter, and basically what we were thinking was that we have perhaps a possible diagonal structure for the first leg, and the second leg correction was complete. And if the second leg correction was complete, we were then looking for continuation of upside, continuation of downside movement as an possible impulsive structure. That was the main count we had in our last webinar. And as such, I also did place trades, and I currently do have a short on this. Although how it is working and the position sizing and all was a little bit complex, and we'll probably have a quick discussion on that before we proceed with this chart. So what I'll do is I'll load the chart in a second. So here is the actual chart. On screen now. So, as we discussed in our last webinar, we were expecting a continuation of bearish movement. The market was, or our analysis from the last webinar was that after this diagonal structure, we were considering the two complete over here, right? And then we were expecting bearish movement. That was the main discussion from our last webinar. Now, as it so happens, the market did give us a little bit of a complex kind of formation, not really very complex, but not straightforward. That is, did not go down straight off. So I had shorts on this counter, but I did not want to risk the possibility of this market giving up a strong two like this. So I had to take a substantial part of that short position out in loss. I do still have some shorts which are in profit now, of course, but that's how it went. We had to reduce our position sizes considering possibility of bigger loss. Anyways, now the count becomes quite straightforward, suggesting that, one second, let me see. Okay, I'm taking this as the continuation on the flat with the B itself continuing, and see if there is anything else. A up, B down, and then 3, 4, 5 for C up. Right, so there are two possibilities we are considering now. One is that if this is the two complete here, then this market can just straight off go lower. Let's just call this as our H1. Second possibility is that this market can still just be continuing within wave 2 inside what you call this boxed range. And the box range comes between whatever this is, price level between 70.68 and upside is 74 something. So within this box range, this market can just continue propagating sideways. As a matter of fact, it can just extend it a little bit to the downside as well. Something like that, and then fall down. Right. So both cases are basically suggesting H1 and H2 are suggesting bearish movement. Just in the case of H2, we can see some sideways structure before the actual fall. So watch out for this counter as well. Again, I am already holding short, so there isn't much I can say here other than the simple fact that I will look to add more as the market continues lower, for instance, around 70.86 maybe, or at the break of 70.541. I'll look to add more, and it will not be a very big or oversized position because we still have the possibility of the market heading back inside the box range after breaking the low that is giving us a false break structure here. False break gets back, and this, if we do get the structure kind of, this will be the most ideal position to add extremely big size positions in my understanding. Anyways, that's all theoretical at this point. The market hasn't given a false break and hasn't retraced back inside the box range. If it does do that, then we do have the idea of how to handle this market. Overall, it remains look for shorts only, and in case you aren't short already, then look to short below 70.710 with bigger huge stop losses around 73.497. Technically we can go a little bit lower like 72.7, but for the sake of current discussion, because we don't have the full data, the market hasn't done all these things, we can't take things that haven't happened into consideration as of yet because they haven't happened and there are multiple paths it can take from here. So yes, technically it's a swing short kind of position with the stop loss will be huge, and profits will, we don't really know, but our guesstimate is that it will be okayish. Right. Anyways, that's the quick idea here, and let me see if I have some levels marked for bearish structure here. Nothing really special here. Around 69.70 we will have our first support, and we expect the market to go even lower, but that will probably be the level where I book partial positions. So that's it for our discussion on CL, and I don't have anything to add here. So let's now wait a few moments. If you have any doubts or questions in the live chat, just post them while I open up the chart of gold from our last discussion and see what was being said in our last webinar. So here is the chart of gold from our last webinar. Let's just move it a little bit forward and see the exact points that were being made and the trade setups if we discussed anything. We have had quite a winning streak on gold, by the way. Week on week, we have made profits. You can just check the last few webinars to determine what we were really doing. So yeah, in this particular session, I was very cautious. I remember we were only looking for longs if we see a move above 2929. Otherwise, it could also continue downside. We did not discuss the exact setup for downside, but all I discussed was the possibility of remaining cautious and only going long if we see a clear setup above 2929. So yeah, the setup was long above 2929. So that's it. Let's now actually check the live chart. Here is the live chart. Where is the market? 14th Feb, somewhere over here. So the market was somewhere over here. Since then, the market has actually gone above 2929, which will be the price level somewhere here. Although it hasn't given us really a very classic movement or anything. It's just a very standard looking small upside movement. So let's now see what's happened because I have also changed the counts on this 4H chart. Let's see what's really going on here. We can check it from here. So from this point of reference, price level around 2597. We seemingly have wave 1 up and 2 down. And we are assuming that I think that the fourth is continuing in this progression. Let's check. Yes, that is what we are assuming. So we are assuming the third is complete here and the fourth is continuing in the progression or possibly even complete. So remember our last discussion was quite complex. This is not the same. I have actually done or redone the whole count. And basis on that, we are assuming that 4 is either here complete or maybe just continuing sideways. So expanded box range here, a little bit expanded range. So anyways, the point here now becomes very simple. We are looking for long only. Either it can just go up here or because this is a box range, it can also propagate here, making the 4 somewhere within the box before it takes off. So gold is a long only market at this point. Personally, I like to add longs, of course, at the pullback. If we do get one that is price movement within this box range, that is, it goes a little bit lower, let's say below 29.10, if it goes, that will be a good entry point because that will reduce our stop loss, increase our risk to reward potentially here, right? If not, then I like to just add longs about 2954. So that becomes our simpler setup. 2954 plus, we look for longs and the stop losses. Let's just check that. We don't have a stop loss as of yet because the market has not really completed the fourth wave structure. Currently, we are assuming it as a continuation, possibly as a flat. So currently, the technical stop will be 2863 because this is the point from where we are assuming the wave 4 is continuing. So that will become our stop loss level below 2867. Right. Currently, we are assuming that the structure is possibly heading as a down, as a B up. possibly as a C down. If it's not already complete here, it does look like it has at least one leg remaining for the C. And the structure may very well be. It's better not to comment on the structure. It does look like some more downside can be seen here for the C. Right, so very simple setup. Definitely keep that in your watch list. And we already have some upside levels marked here with the immediate one being 2977. Of course, I will have to update them given the condition that we don't have the end of wave 4. That will also give us an idea of where the structure will complete the fifth leg. So this target level will obviously be updated. We just don't have the information enough to update it right now. I don't think there is much to add here. It's a rather simpler setup and a simple analysis. Do let me know how you are finding the pace, and if you have any doubts or questions, just push them in the live chat. And at this point, I'll also request you guys, those of you who are enjoying the content, hit the like button, but much more importantly, kindly share the content with your what do you call 1 second. Yes, as I was saying, kindly share the content with your fellow traders in your discords, like WhatsApp or whatever form of social media you are using. In case you are not in part of any members group or anything like that, do make sure to retweet the thing or share it on Facebook or something like that. You get the point, right? Continue sharing the word. Anyways, that's about it for our discussion. And the quick request, let's see. Nothing here. Thank you for the confirmation here at your guideline. In that case, let's now head over to our next chart of S&P, which will be followed by the chart of BTC. So let's check what was being discussed in the BTC segment in our last discussion. It has been a little bit of a complex structure. I have to say it was not the most clearest market this week to track. And as such, many markets saw an updation of the counts, and the structures were complex. During the week, we did not have a very good number of trades. Actually, I think very small number of trades we got this week. So anyways, let's see why that is or how that has impacted our current view. Firstly, we are looking at the chart from our last discussion, which was conducted on 14th of this month. And here looks like we were expecting a sideways movement within this marked box range. And we were looking at the structure as a flat correction. And the idea was that from our point of discussion, when the market was trading around 61.12, we were expecting some downside movement before takeoff. So small or minor correction followed by up move was the idea. That being said, let's now head over to our live chart now on screen. Let's check first of all from our last discussion. There it is, 14th. So we were expecting that this market, I think the counts have changed a lot. So anyways, what we were expecting in our last discussion was that this market will give us a correction somewhere over here around 14th, something like that before a takeoff. So the market has not really performed well in this particular segment, right? And what that means is we need to see what has changed and what is our current look basis on the change. Hmm. So this makes things simple. Our point of reference for this analysis will be this low over here, price level 5767. From this point of reference, what we do seem to be having is an impulse in the upward direction. And after this impulsive move, we do have a correction again. It's a wave two correction. And in this particular case, it really is a complex count. I have itself counted it as a very complex kind of structure. So instead of discussing it in detail, I'll just point out very quickly that this is the kind of market where the counts will continue to, or are very likely to continue changing. And the reason being, in complex structures, there are multiple aspects the market, or multiple ways the market can move. So the counts are kind of not very important in this point. What is more important is the fact that this market can just propagate sideways within this range. We generally do not want to see the market break the downside range, but as I said, this is a complex structure, so we will have to give it a little bit of leeway on the upside as well as on the downside. It can just continue lower before takeoff. So basically, this is a very what you call risky kind of market, risk on market, or whatever terminologies you use. As such, even though I have a minor small long position here, and the targets are going to be very big if the market moves as we expect. The stop loss at this point is also very big. To be precise, as such, swing low is coming around here, 5800 something. And even if you move it up a little bit, 5850 is a very huge stop. Although I am not taking the stop loss there, I'm just suggesting that the actual stop should be there. We haven't taken the that big of a stop loss on this position right now. Now, as far as the counts are concerned, as I just said, we can just consider this structure as a continuation of complex structure. Perhaps we can take this as a W, perhaps we can take this as an X continuing, and then Y before the takeoff. Right? That's just one way of looking at it. I've just simplified it for the sake of keeping things easy for our YouTube audience. As such, just keep in mind that this is a not a not a beginner friendly market. Perhaps wait and watch until the dust settles or things become easier or clearer. Right. So I will not add much on this counter. I'll just check if we have discussions for upside targets. Not really. And as such, we don't really care about that either. If the market does perform as we expect, then this market has already given, what is this, 60, 57, 70 to 6130. So what do you call 300 something, let's just call. So whenever this market starts to take off to the upside, we can expect 300 plus point move, 450 or maybe higher. Right. So if the market starts to take off from, let's say, 6,000, 6,000, so 6,300, 6,400 and 6,450, those will be some rough levels. So there is a huge upside. That is not the question. The question currently is only when will we take the upside. So for that, as I just mentioned, this is a complex count, and I would like for the market to clarify things a little bit before we jump the gun or do anything about it. With that being said, I think we are done with our discussion on S&P. I'll just avoid discussing it in any more detail for now, and we'll discuss things as they progress in our next webinar and obviously in the Slack private group. Yes, so for those of you who missed it, there was this announcement at the beginning of this webinar that last webinar of the month will be private, so only accessible to group members, like private group members. If you are one of them, obviously no issues. If you would like to become a part, you already know how to contact me. The links will be scrolling at the bottom of this video and also available in the description section of the video. Yes, that's it. I'll just move over to our next chart. If you guys have any doubts or questions on this chart, just push them in the live chat while we quickly load our discussion from last webinar for the chart of BTC and see what was being said back then. So here is the chart of BTC from our last discussion. We seemingly have a setup saying 101600 plus. is a long setup, and the idea is A up, B down, and then C up is what we are expecting. Now actually it has actually respected the count so far. Let's now see what is exactly happening. Here is live chart, and this is the discussion from our last webinar. Where is 14th? Let's check. Yes. So up till this point, it has respected everything we, as I just mentioned. Let me zoom in. We have proposed a count that this is an A up and this is a B down. So we are expecting a C up, and within that we are expecting, because in a ABC progression, C will have what you call five waves inside of it. This will be the one, let's say. This will be the two, this will be the three, and so on and so forth. You get the idea. So in the past discussion, we have already discussed that we expect this to be the one, and the two was still forming. We were of the view that we don't really care how wave 2 is progressing. We want to go long only above 101600 plus. So I have an alert. Basically, we want to go long at the break of this wave 1 high. So I have a long alert for a possible long placed around this level only. And so far it has respected the count. That is to say that wave 2 can be here, and we can just count this as a ABC perhaps. I haven't really checked it in great detail because we don't really care here at this point. We are only interested in longs above this level. So the setup remains intact so far. What I will say is this market is moving as per analysis, and definitely something to keep in our watch list for possibility of long setups. Nothing triggered yet, but it does look like it will give us something really clear, or may give us something really clear in the time to come. Right. That being said, I don't think there is much to add here. It's a wait and watch market, and who knows, maybe the wave two will progress a little bit more sideways, and we'll have to probably wait a little bit more. Not a very interesting market, if you ask me. So this week, or sorry, the coming week, the focus will be on euro, and CL is already in play. We already have a short trade there, and gold. Yes, gold will be an interesting one. So those three will be the main focus. And with that being said, I will say that we have discussed everything that we generally do discuss in these webinars. If you enjoyed the content so far, I would request that you do kindly hit the like button. And much more importantly, as I've shared it earlier, or said it earlier, that do kindly share this webinar with your social groups, right? Your WhatsApp, Slack, Discord, whatever you use with for communicating with fellow traders, friends who are in trading. And lastly, for the coming webinar, which will be conducted on next Friday, it will be members exclusive 28th February. If you are interested in joining it, it will not be like this. I will also allow the members to use voice in case required instead of just typing in the queries via text. So obviously, it's a private webinar. It will be more interactive, and I will have more free hand to discuss things which I cannot discuss here, and get into a little bit more detail about the concepts and applications, etc., etc. So that will be it. It will be an interesting one, I believe. So if you are interested, you already know how to join in. If you are already a member, then I'll see you guys there. And with that being said, I think I'll put an end to my words here for this webinar, and I'll say thank you for staying till the end, and I'll see you guys in the next one. Take care. You're very welcome, Luis and Joe. Yes. See you in the webinar next week, Joe. Bye, guys. Take care.